Hey, what's up, everyone? Happy Sunday night. So, there's been a lot of talk in the headlines recently about all these crazy mortgage changes that are being proposed. So, we figured for episode 10 of the Ninja Wealth Exchange here, we would talk about those changes, right? What do you really need to know? Some good ideas, some maybe not good ideas. So, who better to ask than some mortgage nerds, right? So, Johnny here, he's got like what 20, 30 some years of experience in mortgages. Um, I've got one. So, today on the show, we figured, you know what? Well, let's get down to the bottom of this. Let's talk about these proposed mortgages. Are they really going to make homes more affordable? Are they really going to be better for you as a borrower? So, let's get into that. So, welcome to the show, Johnny. How you been?
Good, man. Good. It's interesting. We're going to be talking a little bit about, the 50-year mortgage. So we just, our Hmong people have been here for approximately 50 years. And I just got back from a gala, a huge gala, last night, actually, where we had, I don't know how many speakers they had. They had a ton of speakers there, but some distinguished guests were some of the state representatives in Minnesota here, as well as the elected mayor of St. Paul. She came out, she spoke over there. That was really really cool. And her story, I think, was awesome. Like, so in our culture, right, we have this thing where the moms, when they carry the babies, they usually have this sheet, right?
Mm.
I don't even know what you would call it. It's like a quilt that they put on that has these wraps, and they wrap it around their back, and they carry their kids on their back. Well, um she was like, hey, so, like, during all the wars, the difficulties and the challenges, the fathers were in the front lines, and they worked really really hard to get us here into the US, but it was the mothers who were all carrying people on their backs in order, and dragging each one of their kids to just try to make it out of the war. And for all of us here, there's a ton of us here in Minnesota, and like I said, there was a number of people who were super successful, who were Hmong people that came over from Laos, from Vietnam, from Thailand, that made it over here into the United States. And because of the Vietnam War, and because we are allies with the United States, and that was like, it was huge to see the Hmong people's success. Like, I don't know how many millionaires I met out there. It was really really cool. I even met the guy from I think his name is Chang Koo from Shark Tank, where he had a product, and he's like the first Hmong guy on Shark Tank to receive a deal. I believe he said it was with Barbara Corcoran, which, I mean, like, I couldn't imagine the amount of selections that they had to go through before they picked out his, and got him on on a path where he's excelling in what it is that he's doing. And to just see the amount of business, like everything from Sunisa winning the Olympics to Gohli, her winning the mayor elections, and so many doctors and lawyers and successful people, like, to see us be able to complete that in 50 years. I mean, I don't know, I'm super proud to be Hmong just because of it. So
Yeah, no,
um
that sounds like a great event. Awesome time.
yeah, 50 years. So
To
50
the
years,
show.
like 50 years mortgage.
Yeah.
How you been,
So,
man?
no, been good. Been good. Been a busy weekend with real estate and everything like that. Actually enjoyed the slow Saturday yesterday. So, got ready for winter, getting the brakes changed and
Nice.
snow blow around, So, but on to more exciting things. Let's talk about mortgages here.
Mm-hmm.
So,
Let's do it.
one of the first headlines that recently came out about the changes to the mortgage industry. Fannie Mae is removing the minimum credit score guideline, right? So there are, it used to be if you had less than 620, it was automatic failure, right?
Mm-hmm.
So when you run what AUS, the automated underwriting system, right, with an applicant, if your applicant had a credit score under that, just automatic fail, right? So what does that mean now that they're changing that? Is that really going to help?
Well, so, I mean, for Fannie Mae, right? This is, one of the large institutions out there. They had that guideline. However, there were other products out there that didn't. Say, for example, FHA had I think it's a 580, right?
Mhm.
But I mean, we all know that Fannie Mae's products is a little bit easier to use, as well as it sometimes allows for less down payment, right? So FHA requires 3.5. Conventional allows 3% if you're a first time home buyer, right? And
Mhm.
so because of that, it might open up opportunities for more people to qualify. However, um, you know, um, with the people that I've seen that come across with the 620 FICO score, um, they've always been difficult to do. Even if I could go FHA with it was very, very challenging, very difficult. Your rate's not the best, right? And for me, I've always just recommended, hey, you know, give it a couple months, work on it. Here's some ideas that will benefit you. Try these things out. And if your credit score comes up, even just like 20 points, your rates are going to be a little bit better. Your positioning will be a little bit better. So usually that's what I recommend. Plus, um as lenders, we're responsible, right, for our clientele. And if you're not able to handle your credit well, it doesn't make sense for us to give you a loan either, right? So that's something that you have to consider. Of course, we let underwriting do that, right? So, and I used to be an underwriter. So when I come across a file where, they consistently just make late payments, we're not here, as financial institutions to give random loans out to just anybody so that I can put them into a foreclosure. Nah, that's devastating, right? On families and such. So when when they're talking about removing the 620 FICO score, that means that if your credit, has been kind of repaired and you don't have, like, in the last, let's say, for example, 24 months, you really don't have any lates. And I'm generalizing here, right? I'm generalizing because no one knows the algorithm for these decision engines, right? So, or at least I don't, right? um when your credit score in the last 2 years hasn't reflected what your credit is doing, say, for example, you just stopped using credit altogether. You paid all of your bills, everything was in order, everything was organized, but your credit score just never came back, right? There's a possibility of that your credit score is under that, but in the last, like, 3 to 5 years, you didn't use any credit and everything's already paid. There's no more collections. There's your credit is clean, right? I could see them doing the loan, right? I can see them doing the loan. It may seem like you're responsible in the last, 4 years. I'm not saying that the other folks are not responsible, because anybody can run into a difficult situation, lose a job or something, and then you can't afford to pay, all the bills that you were used to paying. And so, that being said, I think that when you get into that type of position, give us a call, reach out, we'll run some numbers and see if we can make something happen. But um and I'm not going to say don't keep your hopes up, because there is hope, right? For some people, I think that there will be some opportunities for them to be able to get into homes under a conventional product versus an FHA product.
Mhm. Yeah. So something else I heard is that even though Fannie Mae is removing this requirement, right? Still, some lenders will have their own
Mhm.
overlays, right?
Overlays, no,
Right.
as they always do, as they always do. Like, I know that when I used to be with Wells Fargo as an underwriter, um, we had a lot of overlays, things that we just didn't feel comfortable doing. Say, for example, you were related to the builder and to the appraiser and to the loan officer. It's kind of sketchy. So they
Yeah.
wouldn't touch it, right? They wouldn't touch it.
Fair
Or
enough.
like, and when you're buying, and you're related with the sellers, like, there's additional stipulations that you got to go through, where, like, when I went to US Bank, we didn't have any of those, right? So they call them non-arm's length transactions or arm's length transactions, right? So um there's every lender is going to have their own sets of overlays where they find it a little bit risky, and they may not touch it. But I do think that there's opportunity, right? I do.
Hmm. Okay. All right.
What have you heard about it, man?
No, I mean that's kind of all I've heard. To be honest, just that it's being removed, and I mean, kind of like you said, it just gives buyers a potential opportunity for a fair look, right? Doesn't necessarily mean you're going to get a pre-approval, but at least now you get a fair look, right? So yeah, it should be a good thing overall. All right, so let's move on to the next thing, the thing that we talked about in the beginning here. So one of the more popular, talking points for the entire last week here, everybody was talking about it. You mentioned people at church were talking about it on Sunday. People on Facebook were talking about it, right? So, Trump proposed a 50-year mortgage, right? What do you think about that?
So, first of all, right, as far as I'm aware, it hasn't gone into effect yet. It's not something that's passed yet. It's something that is they're just thinking about doing, right? And I think Trump tries to follow through with what he says. Now, like I don't get too political, but say for example, it does come out, right? I don't personally like it. We have the 40-year, right? And I don't personally like it because I believe that the majority of the people in the United States should try to pay off their mortgage as fast as possible. However, if you're an investor, I think it could be a huge opportunity. Um, I mean, you can buy a house for a cheaper payment, cash flow on it over, cash flow on it for 50 years. It's almost like borrowing money that doesn't have to be paid back that fast or much slower. And so like if you just I mean, I talked to someone about it and I was like, look, so it's for me, it's kind of like when I was growing up, the max the max number of years you can get on a car loan is 5 years. And now I think it's moved to like 10. Some
Really?
places yeah, you can get a 10-year car
Wow.
loan. I mean, granted, cars are lasting longer these
They
days,
don't even
like
last 10
back.
years.
I think there's cars that, that they're lasting much longer than they used to. But I don't feel comfortable because, the prices of cars have gone up dramatically for people to afford it, especially the newer generation. They need to be able to, have these 7-year terms. And, like one of my buddies, like, they're like, hey, so I have a Tesla. And I'm like, okay, so what's your monthly payment? He's like, it's like 450 a month or something. I put a little bit of down payment on it. It's only 450 a month. And I was like, oh, that's actually super reasonable. Right. And I was like, because mine is like $400 a month for a Toyota. Right. And I was like, how did you get, a $80,000 car under $500 a month? And he's like, oh, the term's over like 7 years. And I was like, oh, okay. All right. Like, how long do those batteries last? Like, and so that's kind of my thoughts around it is that, okay, so for the average person, if you got the loan out and you did a 50-year mortgage, and I'm just like, what's the average price for a house across the US? About 325,000,
Something like
I
that.
think.
350. Sure.
Yeah. Okay, so let's say 350. I'm gonna crunch some numbers real quick while
Okay, sure.
we're doing this, right?
Go ahead.
Because I have a calculator right in front of me.
Okay.
So
You want to
in
share a screen?
for what was that?
You want to share your screen?
Yeah, let's do that. Let's do that.
All right. So,
Um,
let me know when you're ready. I think you could just hit that share button there.
all right, let's do that. Okay. So can you see my screen yet?
Yep. We add it to the stage here.
All right. Let me zoom in a little bit.
Yeah, that's good. You can see it.
Okay. Oh, whoops.
No, it's too
What's going
small.
on?
Okay. Now we can
All
see
right.
it.
All right. Here we go. So let's say, for example, you put, I don't know, 5% down. I think this is 5%, right? Yeah. So that's 5% down.
Okay.
You bought a house at 350, 5% down at 6.25. you're looking at total interest of $404,000. Let's change this to 50 years. And I mean, like my computer's not even liking it, right? Yeah, my computer's not liking it.
What do you mean?
But it increases dramatically. I think it's like 690
Yes,
to
almost 700,000. Yeah.
Yeah, that's practically $700,000
So
from
what was it at?
400.
What was it at 30? Okay, 400
Yeah,
to 700. So you added another 300,000 to it,
in
essentially,
interest. In
in
interest.
interest.
I mean, I don't know.
Wow.
Like you're already buying double the price when you're doing a 30-year, right? And
Now, what about
I
the
always
payments?
recommend.
Let's look
What
at
was that?
let's look at the payments. So 2,047, right?
Yeah.
A month.
Yeah.
Okay, and then change it to 50 year again. And
That's
so
18.
18. So how much did you save? Like about 200 some dollars?
Yeah.
200 and change?
Yeah. To save $200 and then pay, 300,000 in interest in those 20 years.
Right.
I don't know,
And
man.
so that's been the argument that a lot of people have been saying, that hey, 50-year mortgage doesn't make sense. You're paying like almost 2 times the amount of interest for barely saving anything. Right?
Yeah.
And so yeah,
I
it doesn't.
can't. Yeah, you're saving $235 a month.
Now something else that a lot of people are overlooking is that they're assuming the interest rate is the same at 50-year as the same as 30.
No, it's gonna be
And
higher. Yeah,
usually when you go a
it's gonna be
longer
higher.
term, your interest rate is higher, right? So
Yeah.
we're running at the same.
But
But
even less, right?
right,
You'll probably save about $200 a month, right? An average person that's buying an average house is probably gonna save about $200 a month.
Mhm.
And I don't know, man. Like look, if you're an investor and you can do this, you can make $200 a month extra.
Oh,
And you can do like
pretty good,
100 of them.
yeah.
That becomes better money, right? You
Yeah,
can
yeah.
save 2,000 a month. Like you 10 times that. Let's say you have 10, right? In 10 times that's $2,000 a month. That you're making decent money on 10 houses, right? And then if you
Mhm.
multiply it by 100, that's $20,000 a month. Hey, you're doing pretty good as an investor, right?
Right.
And at some point in time, with the expected increases of value over time, if you keep it for 50 years, I'm pretty sure there's going to be an increase in value. Eventually, my hopes is it offsets, right? At some point in time. I just don't feel comfortable with it. But let's say, like, because 50 years, like we just got done talking about, the home community changing in 50 years, right? We have people
Mhm.
going from, refugees to becoming doctors and lawyers in 50 years. And
Mhm.
so much could happen in 50 years. You just don't know. Now, if you can make $20,000 a month, you can make $20,000 a month. That's, for an average person. If you can go out there and you can get 100 rentals, fine. Go, like, have a ball. But that's not an average person. That is
Mhm.
not an average person. And for an average person, you're paying $300,000 more in interest.
Yeah.
I mean,
Now
I don't know.
the other
I don't
thing
even know if
that
the banks would like it.
a lot of people are kind of overlooking, though, is that how long do people actually stay in a home, right?
Yeah.
So it's just like a
Yeah,
car, right? How long does it last, or how long do you keep a car, right?
exactly. Exactly. Like check this out, right? So you got your 30-year mortgage, right?
Mhm.
Your balance, these are your balances, right? Or these are your principal balances. These are your balances before payment.
Yep, yep.
After the payment, these are your balances over here.
Mhm.
And so the balances barely go down in the first year. So you go from, 332 to about 328. And if we change this to 50, like you made what, $1,000 over 12 months
12 months, you
in
barely made
in
$1,000 dent.
principal payments. Yeah.
Yeah.
I don't know, man. I
Yeah.
if you are savvy, go out there, go ahead and use it to your benefit. If you're an average American, my personal opinion, right? Because we can't give legal advice here. My personal opinion is, hey, you might want to stay clear of it, if at all possible. Save up a
Yeah.
little bit, put a bigger down payment, try to get a 30-year, figure out your finances, put yourself in a better position, like make more money before you do it, right? And then
Right.
you'll
Right.
qualify for a 30-year. But
Now there's people out there who play they get the 30-year, but they pay twice the mortgage, right? So they can pay off faster, right?
mhm.
You heard of that, right?
Yeah, yeah. I think that if you could do that, that's super awesome. I mean,
Yeah.
even if you just make, I think, one extra payment a
Mhm.
year, you're gonna save something between 3 to 5 years on your mortgage. So,
Right. Right.
with one extra payment a year.
Right. So I mean, somebody
So,
could do it with a 50 or two, right? Get the 50 and then make 3 payments. I don't know.
I mean, if that defeats the purpose, right? That
It
defeats the
does, it
purpose
does,
because
but, you know, gives them flexibility, right? So,
true. Yeah, you save 200 bucks a month in case, right? So if you can make the 30-year payment, make the 30-year payment, but in case you run off in a tough situation where you got to save 200 bucks a month,
yeah,
then yeah, make the lesser payment.
right,
But I don't know, man.
yeah. Now, the other thing that I think a lot of people aren't realizing is that, if this does pass, right, what it's gonna do to home values, right? If all of a sudden people have people that couldn't qualify before, now they qualify and they get back in the market game, right?
Mhm.
Um, yeah, all these real estate prices gonna go up, right?
Supply and demand.
Right.
Yeah. Yeah.
So, are you really saving anything? Maybe not, right? Are we really making homes more affordable by doing this? Maybe not, right?
I mean,
So,
look, if I'm an investor too, right? So you and I both, we own properties.
yeah, yeah,
Our our values will increase. So we're gonna be okay with that.
yeah, we'll be happy
But
with that. Yeah,
right. But the I think for the average person, that owns only 3 houses a year, your first house, your upgrade house, and then your retirement house. Um, I think that it'd be a disservice. I don't know. That's just my opinion.
yeah.
Being in the mortgage industry as long as I've had, but things surprise me all the time. So like if you do a 50-year mortgage and your house increases in value in like 2 years and doubles, hey,
Oh
you're
yeah,
gonna
it's
make
crazy.
out just fine. You're gonna make out just fine.
Yeah,
So,
right, right.
um,
Yeah, and that's the
it
thing. We can never predict what's going to happen.
mhm,
But
mhm.
thing is, when the rules change, in the game, right, you just gotta learn and how to adapt and adjust to the rules, right? So,
Yeah, yeah.
all right. So the latest change that was being proposed that I saw going around is portable mortgages. So, can you kind of explain what a portable mortgage means?
So my understanding of a portable mortgage is instead of getting a new mortgage and getting a new rate, when you go and you buy the new house, right, your mortgage just transfers with you. And so as you sell your house, the mortgage transfers to the new house. Um, that's my understanding. I don't know if like have you heard more about that?
That's kind of what I heard too. But like, so say for example, you live in a house right now, right, and you bought it back in COVID times when rates were 2%, right? And so
Hmm.
you don't want to leave your house, you don't want to sell it, you don't want to go get a new house because you're going to lose that 2% rate. Well, a portable mortgage would allow you to take your current mortgage with you to the next house and apply it, right? Now, this is where I'm assuming that obviously if you have a $200,000 mortgage and you're bringing that with you, you're going to buy a $300,000 house. Well, then you would have the difference, the 100,000 at the new rate. So basically, you would have two mortgages. That's how I would assume it work.
That's my assumption too, but I don't know if like because lenders can do whatever they want with it, right? And
Hmm.
I know that they're using this in different countries, right? It's more
Hmm.
common or what I've heard is that it's more common in Canada, the UK, Australia, but in the international markets, but it's definitely not common here in the United States. And I think that, if they allow you to transfer your existing mortgage, your existing rate, yeah, my assumption is they're gonna have to give you a second loan for that difference, right?
Right.
Um, like before we jumped on, we were talking about it a little bit, and I can't see banks doing it unless they're going to charge some kind of astronomical fee for it. I can't see them doing it. That's additional paperwork for no reason. And transferring a mortgage, it requires some pretty, I think, savvy here in the United States, anyways, because we got transfer of titles. We have people who owns their land, owns their property, right? And so when they're transitioning, I mean, it might be a few more pages of documents for you to sign, right? So if anybody signed a mortgage before, you're getting a huge packet, somewhere between 40 to 100 pages to sign. And so, what's another 10 documents to sign, right? It's probably not that big of a deal. But um in the interim, I think that, and I don't think people are going to stack loans on top, because what are you going to do? Make it a second lien position? Will it be a second lien position, or will it be considered part of the first lien position and have the same authority? Like I think there's a lot of laws that they have to jump through to make these hoops happen. And in addition to that, there's like, I can't see, like, if I was a lender, I don't see doing it. Because there's going to be people who's going to have enough money to go ahead and just buy a new house versus having to transfer the mortgage. Maybe if we were doing it for a special interest group, say for example the retirees, and it was only exclusive to those who are ages of 62 plus, then I could kind of understand it if they're going to move and possibly downgrade, right? But if you're talking about buying a brand new and then do another 50 years on it, I don't know. I don't know. I don't see the banks doing it.
Yeah. It's an interesting thing. Just like you mentioned though, like the liens, that's kind of interesting. Who would get first position if if all of a sudden the homeowner stops paying on one of the mortgages, right?
Mhm. Mhm. Who
So
can foreclose first? Like the mortgage that was transferred or the new mortgage that was meant for the house? I mean, I
yeah,
don't know. I
interesting
don't know.
stuff. But yeah, I mean, would this really create, would it help somebody to afford a home? Yeah, probably, right?
Yeah,
It would
I could.
incentivize current homeowners, right, to leave their home. But now, would it actually help create, what about the first time home buyers or the people who don't have a home right now to take advantage of this, right? Does it really help
Right.
them?
No, it
No, it
doesn't.
doesn't.
And we know that like the majority of the people that are buying each year are the
Hmm.
first time home buyers,
Hmm.
right? I think like they probably consist of 50% of new business nationwide. I mean, I'm speaking out of randomness. Like that's just my experience. Is the bulk of them are going to be, I mean, minus the institutional investors, right? Because those guys, they buy on massive demand. But when it comes to people in the normal market that impacts the economy, right?
Hmm.
um from the I would say the micro economy, those people, like 50% of them are first time home buyers. And so you
Yeah.
can't transfer a mortgage. Now there's assumable mortgages out there, right?
Right. And that's what we're gonna
But
talk about
that's
next.
different. Yeah, that's different.
So the other thing that goes kind of hand in hand with that is assumable mortgages, right?
Mhm.
Um, um, so what is that?
So
What does it mean?
assumable mortgage is when the current mortgage company, it will be willing to take on the new buyer under the same mortgage terms, right?
Hmm.
And so FHA allows assumable mortgage right now. I think VA does as well, right? So
Hmm.
both
Yep.
FHA and VA
Yep.
allows assumable mortgages. Conventional currently does not allow it, and as far as I'm aware, all the non QM, right, non qualified mortgage or non conventional or portfolio type products, none of them allow it either. So
Hmm.
the only ones I really know about that does allow assumable would be your FHA and VA. And um so usually, yeah, when you go and you see a house that has an interest rate that's much lower and that's the actual interest rate that you want, you have to go through that institution. and find out if you qualify for that loan. So you would qualify just like you qualify for a normal loan. However, if there is a difference between the sales price and the new loan amount, you have to come up with that in cash, right?
Really?
So
They wouldn't give
yeah,
you a second?
I have not seen anybody do a second mortgage on it yet. I mean, you could probably come up with the cash and then turn it around and get a second mortgage to pay off, that, or to recoup your cash. But I think that for the most part, you're going to see that they're going to
Yeah.
want you to put some kind of down payment down, or
So something
find a way
something
to pay that lien.
something interesting. I had a lead come in from somebody. It was a buyer
Okay.
lead, and this real estate agent, he specializes in assumable mortgages, right? And
Hmm.
so he nationwide, he generates leads on this, right? And assumable mortgage is something like you just mentioned. A lot of sellers don't even know that they're sitting on this opportunity, right? When
Hmm.
they're looking to sell their home, if they have a FHA, if they have a VA, this is something that you could market, right? And
Hmm.
obviously, somebody who values a low interest rate, they could come in and take over your loan, essentially, right?
Yeah.
Um, Now, this guy that I was talking to, he had to lead for local market for me, and I was talking to him about it, and he was kind of explaining how it works and whatnot. Essentially, what he told me, I don't know if this is going to work. I mean, I've never done it, but what he told me is that what you do is you assume the first mortgage, right? So
Hmm.
FHA, VA, whatever, and then the second, so the difference, you would go and get a HELOC because the new owner technically would own the home, quote unquote. They would go apply for a HELOC, and that would cover the difference. So that's pretty interesting. I was like, wow, okay. So,
Yeah, I think those HELOCs are probably specialized HELOCs, right? I think if you went to a local bank or credit union,
mhm,
I don't see them doing it because
yeah,
your name is not technically
not yet.
on title
Right,
yet.
right,
Yeah.
right, right.
So,
Yeah, yeah,
it's gonna have to be some kind of third party, maybe a private lender that
yeah,
is gonna.
maybe. Yeah, I don't know,
Yeah.
but hey, that was pretty cool.
Mhm.
Um, yeah, but then there. So we're talking about FHA and VA, but in the real estate investor world, there are a lot of people doing sub two, which is basically a assumable mortgage, where they quote unquote, it's like lawyers, attorneys are involved, contracts are involved, right? And these investors are basically taking over somebody else's mortgage, right? Is that
Mhm.
how it works?
Mhm.
I don't know. You deal a lot with more with this than I do. Can you kind of explain how
Yeah.
that works?
So it's actually not quite. So this is my understanding, right? And I could be completely wrong with this, but this is my understanding is that when you go out there, it's not technically assuming like what the lenders would call assuming. It would be, you're just paying for it, right? Say, for example, you have a house that you want to sell and
Hmm.
I want to buy it and your rate is good, but you have no equity in it, right?
Hmm.
And I'm like, you know what? I like the monthly payments. I think I could make, income on it. Say for example, I'm going to turn it into a short-term rental and double the monthly payment, right? Then I would take it from you and say, okay, so I'd like to buy your house from you. How about I give you $10,000 and you give me the deed and we'll deed it into my name, uh, and then I'll just make sure your mortgage payment is paid. And if at any point I default on the mortgage, then you get the house back, right? And so you have that, it becomes kind of a contract, right? I mean, you can look at it, it's very similar to a contract for deed, except for the mortgage stays on. And sometimes you can't deed it into your name, you just have the right to deed it.
Hmm.
And so it stays in the other person's name until it's
Hmm.
paid off.
Right.
And when you're doing that, like sometimes some of those investors will write a lease, right, to the person. But with knowing that at any point in time they decide that they want the house, they can deed it into their name, do a refinance and pay it off, right?
Mm.
Now some people deed it without paying it off. In the state of Minnesota, my understanding is that as long as you're making that monthly payment, the banks can't foreclose on you, right? Or
Really?
they can call the loan due, but if if you continue to just make the monthly payment and they call the loan due and you don't pay the due amount, they can't actually foreclose on you.
Mm,
So that's just in the state of Minnesota, right? In any other state, it's going to be different, right?
mm.
However, in the state of Minnesota, that's what they allow, which means that if I bought your house and we're in the state of Minnesota and I deed it into my name and I continue to make that mortgage payment because I'm making twice the income doing whatever investment I'm doing on it, um, they can't really do anything to me. So
Yeah.
they go ahead and they move forward. Now,
Mm.
the due on sale clause is a real thing. People think that the banks don't implement them, but they do. I know people who have done something similar and the bank just came and took the house, right?
Hmm.
Because most mortgages that are done, from my understanding, there is a due on sale clause, meaning
Oh
if
yeah.
you sold it to somebody else, you have to pay us off, right?
Right. Right.
And if you don't, we will foreclose. And so I've seen that happen. So
Hmm.
be careful if you're going to jump into those are really creative financing stuff. If you don't know what you're doing, get some professional advice before you jump into doing something like that.
Yeah. Yeah. So anyway, assumable mortgage, if it does go into effect, do you think it's going to benefit the housing market in terms of affordability here?
Yeah, I think it'd actually be super beneficial for everyone if assumable mortgage actually take place, right? If we could, right, get a HELOC for the difference, and if
Hmm.
we could, buy the house at someone else's rate and
Hmm.
make it cheaper,
Yeah.
um, yeah, it'd be super beneficial. That's the same thing with like the portable mortgages, right? If the
Yeah.
portable mortgage actually happens and you as an individual who wants to buy a house, but let's say for example you want to upgrade, but your rate is 3.5%. Well, currently the rates are much higher than that. And so it makes it so that you don't want to sell. But the thing is that if the portable mortgage and the assumable mortgage comes into play, that allows people to jump in and allows people to be able to do some transactions if they want to move, right? Let's say for example their house is like, I met a few people, right? They have a 3% mortgage and they're like, I want to downgrade, but if I
Mhm.
was to downgrade I'd be paying more.
Yeah. That makes no sense, right?
And yeah, exactly. And they're like, I don't want to have to clean this, 5-bedroom house and dust it, the whole entire thing every year. But I have to because it's cheaper than if I was to move into a 2-bedroom. And
Hmm.
so, I could see it being possible. I think we have, what some people are calling the silver tsunami coming, folks that, are empty nesters
Hmm.
and they don't want to live in big houses. They want a one level where they don't have to climb stairs and such. And for
Hmm.
those people, it'd be super beneficial for them. So I think it's a good thing if it comes out. That's just my opinion. Like what's your opinion on it?
Assumable.
Yeah.
Yeah, I think it's good. I mean, the loan already exists, right? So if you could take it over for somebody else, somebody's paying it at the end of the day, and then if there's a way for you to pay the difference, obviously, right? Because there's going to be appreciation, right? So
Mhm.
you're going to be buying the house at a higher price than the current mortgage, obviously. So as long as there's a way to make up that difference, and you can still qualify for both, and you pay both, why not, right? So,
Yeah. Yeah.
um,
I
yeah.
think where it becomes difficult and from a financial institution perspective is at what point can we determine that these people are going to be actually paying it, right, if they assume it, and who's going to be responsible if they don't pay it, right, and stuff. And I know that for assumable loans, whoever assumes the loan, they're going to be liable for the actual loan.
Mhm, mhm,
And my thoughts are is that's good except for when you have fraud involved,
mm,
right?
mhm. Yeah,
When
that's
you
true.
have fraud involved, then it gets really, really, really sticky. And
Mhm,
mortgages are one of those things that people often use for fraud just because the amounts are so significant. If they wanted to, I don't know, do something shady for profit, there's a lot of room in there. And so um you'd be surprised what people would do for $10,000, right? And that's where things get kind of funky. Where if someone thought someone was assuming someone's loan and then it didn't go through, and somehow they got a hold of the property and they sold it to someone else and they made money on the transaction, but now they're gone, right? And the loan's still under your name, that becomes really, really difficult, right?
Yep.
So,
Yep. Yeah.
yeah.
No, definitely. All right. So, something else we threw in here is accessory dwelling units, right?
Mhm.
So this is rather newer to the Midwest markets, right?
Yeah.
The coastal markets, they've been doing this for a while. So, accessory dwelling unit is essentially, it can be attached to the main house or it can be a detached, but it's in a new additional dwelling unit, right? That is on the same lot, right? And I mean, it just, I don't know. Minneapolis, it's allowed, right? Minneapolis.
Yeah, so Minneapolis allows for detached ADUs.
Mm-hmm.
Um, and I believe that's the same thing. Like St. Paul just allowed theirs to
Okay.
do some detached ADUs. I can't remember if they allow attached ADUs or not. Like,
Mm-hmm.
attached ADUs, they usually, well, I mean, like, so doing mortgages, I work on the West Coast too. And when you're working on the
Mm-hmm.
West Coast, it's just, mother-in-law suite, right?
Okay. Yeah.
Or pool house. I mean, like these nice little places where they have a kitchen, a full kitchen and everything, and they may have one bedroom.
Mm-hmm.
Here in the Twin Cities, there's a few cities that actually allows them, but they limit the square footage. So, for example, in St. Paul, the max size is 800 square foot. You can't have another property on the same lot that's over 800 square foot.
Hmm.
So, um, when you're getting into a big city, like St. Paul is a pretty big city, Minneapolis is a pretty big city, and there's just a lot of people. It's nice to be able to do it to reduce rent so that people can have affordable houses. But then, it becomes difficult when you're going to sell it, right? Especially in the environment that people just aren't used to buying homes with ADUs attached to them. Now, if they want to use it as a mother-in-law suite, they might pay a little bit more for it, but will they pay the value of the actual ADU? Because my understanding is that in California, they're able to sell their ADUs
Mm-hmm.
separately. And so if you're able to sell your ADU separately, just like a house, it creates a interesting dynamic. But here in the Twin Cities, so far, my understanding is that if you're going to sell your house, you actually have to sell the ADU with it. And
Correct.
so, then you're looking at I mean, there's a couple of places here where they have two separate houses on one lot and they call them duplexes because the houses are very, very similar. So
Mm-hmm.
even though they're two detached dwellings, it's a duplex.
Yep.
So, like my thoughts are is that ADUs are cool. I think that you can make some really, really cool, especially in the short-term rental business. Everybody wants to be able to, hey, like if you're one person and you can go stay in your ADU for a weekend and you want this extravagant, nice house, but when someone's gonna rent it for $10,000 a day and you want to be able to, still be on your lot, well, I mean, it's an option. And so, um,
Yeah. It's
yeah.
interesting. Yeah, it's interesting. No, yeah, so the West Coast markets, like you mentioned, California. I think last time our last guest, CL, right? He said in Seattle they do allow them to sell it now. Um,
Mhm,
and
mhm.
I have seen some for sale where, especially in Seattle, I've seen ADUs for sale for like $800,000. Like,
That's gotta
that's,
be a super awesome ADU.
yeah, like 2 stories, and yeah, it's pretty big.
Yeah,
And then even on the loan side, Fannie and Freddie, they are allowing ADUs, right? And there's, I forget which program, but there's, you can do loans for up to 2, 3 ADUs on the same lot. It's crazy, dude.
that is
um,
crazy. That's
so
crazy.
yeah, and right now, like the newer cities that are just getting into the game with the ADU game, I mean, like Milwaukee, right? right now the rules are pretty strict. You have to be a owner occupied, right? So the primary house has to be occupied, right? You can't be an investor. You can't, right? So you can only be allowed to build it if you're the primary, right? And then also, like you said, you can't sell it separately. Um, so, but it's interesting because back in the day, just like you just mentioned, in the early 1900s, they did have the houses with the duplex. Either it's a duplex in the front of the lot, and then in the back they would have like they call it a cottage house, basically.
Hmm.
I've seen ones where it's a duplex in the front and duplex in the back, or it's a combination of like a duplex and a single family. Those do exist. They're
Hmm. Hmm.
non-conforming, right,
Hmm.
to today's standards, but they exist. Um, but yeah, I mean, in terms of housing affordability, you know, if you can't really sell an ADU, it's not really going to make homes more affordable. It's not going to really increase supply. Um, but if you're a bigger family, right, and nowadays, with more people getting older, like you mentioned, right, mother-in-law suite, maybe
Hmm.
you've got aging parents, they want to move back or they want to, live close to the grandkids, whatever, right? You can have that multi-generational living, right? So this is great for that. Or if you got those old kids that can't, you know, can't get it together, they got to move back home with the parents, right?
Hmm.
You don't want to live with them, right? So this is great for that too, right? So stick your kid moves back home, stick them in the ADU, right? So, um,
Yeah, actually, Saturday, we
mhm,
went to this house
yeah,
where when you go up the steps into the house, there's a
mhm,
one bedroom, one like floor plan, right?
okay,
And it extends out and it's got a nice kitchen, really, really nice area. And then in the kitchen, there's this sliding door, right?
mhm,
And as you go through the sliding door, it goes down to the basement. And then there's also like past the sliding door, there's also a three-bedroom. And it's almost as if you can have two families living there, like
mm,
a retired couple who's living in the nicer area and a small family living in, of course, the basement and living in the other three bedrooms, right?
mhm,
And it had an oven down there, it had a refrigerator, right? Almost as if someone was doing that.
mhm,
And my thoughts are is that like back in the days, this reminds me, ADUs reminds me of the one ADU that I did way back in the days that I thought was really cool, right? This was like and this was probably like 10 years ago. So it was a $1.5 million home, which means it was a really big house. I think it was out in Georgia,
mhm,
and it had a mother-in-law suite to it that was not connected. You couldn't get like or the whole house was one piece, right?
mhm,
However, you couldn't get inside of the ADU unit
sure,
without coming outside of the house,
okay,
right?
yeah, so like
And
exterior
so
entrance,
yeah, so this
yeah,
house was like it was a two-bedroom, really nice interior, very decorated really well and attached
mhm,
to, $1.5 million house.
yeah,
And of course, the bigger house is phenomenal looking. Like it looks like, a chef is hired to cook for them, right? But
yeah,
when you go and you look at the small house actually looks like the caretaker's house.
yeah,
So it looks like,
okay,
like if you're Batman, Alfred's house, right?
the Butler
So
house, yes, okay,
yeah, yeah, Butler House, and, it looked super cool, and I think that, if we could do that kinda stuff, I think it's really, really cool, but of course, you have to
yeah.
have the clientele to be able to sell it
Now,
too, right?
so since we're talking about mortgages for the show, what have you been seeing on the mortgage side? How can somebody build an ADU?
So I actually, to be honest, I haven't seen many ADUs being built.
Okay,
The only ones that I've seen so far is someone takes a home equity loan out,
mhm,
and
mhm.
then they
So like
build
a
it.
HELOC.
Yeah, like a HELOC, and
Mhm,
then if they decide they wanna refinance it, they come back, and if it's allowable and if it's common in the area, so I think that's the biggest thing is that it has to appraise, right?
mm,
And
right,
so if you know anything about appraisals, there has to be like kind properties, and if
right,
there's not
right,
any like kind properties, the appraisal is going to be like, yeah, there's none out there like this, so we can't even consider that piece as a part of the
Yeah.
appraisal. We're just going to count the regular house. And so
Yeah.
you're not going to get any value for the ADU, which means that you're going to run into some challenges, right?
Now I wonder if they would treat it like from a cost basis, like construction basis, right? Because if there's nothing like kind, and is new, so that might
Based
be a
on
question. That might be a
based
question
on
for appraisal.
underwriting, and based on my underwriting history, I
Yeah.
would say no. If the house is
No.
not marketable,
Yeah.
meaning you can't sell it to the average person,
Uh huh.
banks usually don't want to do business with it
Mm.
because they want to be able to buy they want to be able to help you buy a house that if you defaulted on it, they can get rid of it,
Mm-hmm.
right?
Yeah.
And if you're the only ADU and nobody else likes ADUs, yeah, they're unlikely to do it. So,
Yeah. I don't know. I mean, if it's gonna start becoming more popular, somebody's got to be the first, right? So,
yeah, I
um,
was over at
yeah.
the 50-year anniversary thing. We were talking about barndominiums, right?
Oh
Which
yeah,
is
yeah.
another thing that has
That's
become
another
very, very
specialty, right?
popular.
Yeah.
Yeah.
Hmm.
And right now there's only a very few lenders allowing barndominiums.
Hmm. Hmm.
You don't see that many. But I wouldn't be surprised in the next, like 10 years, you're going to be seeing more people that's going to allow it because the construction cost is way cheaper and the house is way bigger. So I don't know.
Yeah. 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 So I mean, from the mortgage side, I was asking a ton of lenders, um, how to fund an ADU, right? If you're going to build one, and if you don't want to do the HELOC, the other option that I heard from a lot of them was basically you want to do a home style renovation loan, right? So basically a refi, right? You refi
Mhm.
into a renovation loan and then so basically, your renovation loan would pay for the ADU. So
Interesting.
yeah, pretty cool.
Yeah,
Yeah,
I think is as long as it appraise, right? As long as it
it's
appraise.
working. That's how most of the West Coast people do it, right? Um,
Interesting.
yeah. So
Cool, cool.
all
That's good
right.
to know.
So yeah, just wrapping up the show here. So that was our last mortgage thing. But so of course the topic is making mortgages great again, right? And really home affordability, right, is the issue here. The housing crisis, right? So
Mhm.
I mean, what's your take on the housing crisis? What is the cause? How do we fix it? Can we
So,
fix it?
I mean, okay, so every market's a little bit different. And I think housing has to do with microeconomics, meaning city-based housing issues. So,
Mhm,
for example, here in the Twin Cities, if you are priced right, your houses are still going in the first 2 weeks, right? Um, Now we're shifting into the winter market, of course, and the holiday seasons are coming, right? Um, but like if you're looking at, I was looking at some statistics, right? And I have some family down in Lakeland, Florida. And in Lakeland, Florida, supposedly, right, they're the fastest decreasing valuations inside of Florida, and due to oversupply, right, and under demand. And that being said, you're going to see housing prices come down. So, for example, if your city is like, if everybody, okay, so I think this is what happened in Lakeland. A ton of people during the COVID season, right, thought that they would be able to not ever have to go back to the office,
mhm,
so they went to places like Lakeland and bought their homes, and a ton of people went because it's a very, very nice little community. It's probably like it's smaller than Tampa, it's smaller than Orlando, and it's right in between the two. So if you wanted to go to either major city, it was a really, really good place to be. However, now that they all have to move back to New York, because all of the employers are requiring that they be in the office because it's more conductive. They have to sell their homes, And because of that, you're seeing they may not be able to find a job that pays like the one that they get paid at in New York, and therefore they have to actually let go of the house. And that caused price increase dramatically during the COVID season, and now it's causing the decrease in prices.
Mm,
However, here in the Twin Cities, we have stable employment as far as I can tell. I mean, okay, recently there was a bunch of layoffs from Target, right? Everybody
yeah,
probably heard.
yeah, I heard that.
Yeah, there was mass layoff. Um,
Hmm.
I haven't seen it actually hit the market yet, meaning, like, so I live in Brooklyn Park, which is one of the major cities that Target is actually in. We have a headquarters here, and this is the headquarters outside of the Minneapolis headquarters. Um, I haven't seen prices of homes drop dramatically yet, but I wouldn't be surprised if it happens 6 months from now when everybody's severance pays are gone,
Mm,
right?
right.
So, and I don't know why they laid off. I don't know if business was just slow and they're gonna pick them back up later on, because
Sure.
oftentimes, companies do that. But
Hmm.
if it's a true layoff due to, let's say, with technology, right? I know like Amazon laid off a bunch of people, and that was due to the increase in AI use and the less need for people. And um, when they laid off people, I don't think those people are getting their jobs back. And
Hmm.
when you see a microeconomic shift like that, like my assumption is that the people that got laid off is in Seattle. And if they are, you're going to see prices of homes drop. So you just imagine 1,000 people getting laid off and 1,000 houses coming onto the market. What is it going to do? Right? Supply and demand, right? I mean, it's simple as that.
Mm.
At least that's my opinion. Well, what do you think?
Yeah, I mean, so we're talking about, today's show is talking about mortgages and financing changes, but I don't know. I don't think really the mortgages is the answer, right? For the housing crisis as far as we're talking. Um, I think more than anything, the thing that I'm seeing the problem with the affordability crisis is people's wages are not keeping up with the rate at which homes are increasing in value, right?
Mhm,
Just
mhm,
like you mentioned, real estate is very local, right?
mhm,
And
mhm.
um, I used to think that, so I'm in Milwaukee, Wisconsin, right? I used to think, wow, Wisconsin houses are very affordable, and especially in Milwaukee. But now when I'm helping clients look at new construction, things like that, we're like sitting right around 600,000 starting. I mean, and then you go look at places like Texas, what you can get for 600,000. You're like, dang, we're right there with them.
Yeah,
And then even you guys in Minneapolis, you guys used to be so much more expensive than us, like at least 100,000 over us,
yeah,
for the similar house, right?
mhm,
Now we're pretty basically identical. I don't know.
yeah.
That's crazy. It's like, hmm, we're
Well, I
not
mean,
that cheap anymore.
it's the cost of construction, right? The cost
Yeah,
of construction has gone up, and therefore
sure.
the cost, like you're going to see less homes being built because it's going to cost more to build them.
Hmm.
And when they are built, they're going to be charging more for them because it actually costs more to,
Yeah,
keep it going, or
yeah.
keep building, and as well as just putting one up, right?
Hmm.
So
Hmm.
of course, when you have, a significant cost to construction, then you're going to see the prices of home increase, and of course you'll see the rest of the homes increase as well, because that means that supply goes down. Now, like I said, it's based on your city.
Hmm.
um right now it sounds like Milwaukee's getting an influx of people. We always, anytime there's a shift in the Illinois market, we always see more people here in the Twin Cities. I don't
Yeah.
know if that's the same with you guys. um but that, like, it's like we're the next, I don't know, one of the next big major cities. And so a lot
Hmm.
of people like to migrate here from
Yeah.
Illinois. Like I have a lot of friends that are from Illinois, here in
Mhm.
the Twin Cities. And so, um,
Yeah.
that, yeah.
No, I think,
You,
I mean, I think from the headlines, what I've seen of Chicago market, they've been pretty steady. They've been actually
mhm,
pretty
mhm,
affordable. Not kind of crazy like everybody else, but yeah, construction costs is crazy, right? Like,
mhm.
like I said, 600,000 to build in Milwaukee, right? But then when you're talking about brand new houses in Lakeland, right? What are those?
Mhm.
300,000,
Yeah.
400,000, right?
Well, I mean, like, yeah, for okay, so if we compare, so the square footage is very different from Lakeland than from here because Lakeland, they don't build out basements, right?
Right. They don't build
And
basements. But if it's
right,
not
right.
finished, it doesn't count,
Sure. Yeah.
right?
I agree with that. But yeah, up here, the two types of houses that sells out the most is
Hmm.
first the split entry, right?
Yeah,
Where there
which
is a
most
basement,
of
but
us don't like in Milwaukee.
yeah, like I have a Milwaukee guy right now that's moving up here, and he's
Yeah,
like, "Yeah, I don't like that split entry stuff." But the
yeah,
reason people like it so much is because you actually get sunlight into the lower level.
yeah. You get a partial exposure basement, right?
Yeah, yeah,
Or lower
exactly.
level, whatever. Yeah, yeah.
So Minnesotans love that. That's like one of the number one sellers here in the Twin Cities. In fact, I have a split entry. I didn't know about split entries until I moved here,
They're
but
everywhere
been
there.
living one. What was that?
There are a lot of those up there where you live. Yeah,
Yeah, they're all
yeah.
over the place. In
They're all
fact, they're
over.
still building them.
Yeah, yeah. I think it's smart because you don't have to dig as deep too, right?
Mhm, mhm. Yeah,
So
it's a halfway dig. So,
right.
um, yeah, like my thoughts are is that the square footage that you actually get to use is probably going to be more than down in Florida. So if you're
Hmm.
comparing apples to apples, where you're comparing square footage and you're not counting the basement, right? And
Yeah.
let's say it's a slab
Hmm.
grade,
Yeah. Slab build. Yeah. 2,000
yeah,
square feet
slab grade.
roughly. Yeah.
Yeah, 2,000 square feet. I think that here is probably more expensive than Lakeland.
Oh yeah.
So we had, yeah, but not by much. I'm looking at maybe Lakeland selling new construction homes at about 320-ish, right? 3
That's
320-ish.
cheap.
Yeah, right? I mean,
That's cheap.
for like a 3 bedroom, right?
Yeah.
3 or 4 bedroom. Yeah,
Yeah.
that's super super cheap.
Yeah. Yeah.
Here, slab on grade, 3 bedroom. Most of the folks that buy it is gonna buy it around the golf courses, and you're gonna see like it's gonna be like 500,000, and it's gonna be
Ooh,
in the retirement community. If you're not talking about slab on grade and you're talking about the split entry,
yeah.
a 4 bedroom split entry is still going for approximately, I'd say the cheapest one would probably be about 450, right?
Yeah. Yeah.
So a little bit more expensive here than down in Lakeland. But I mean, comparable to Tampa, right? St.
Right. Right.
Pete.
Mm.
So,
Yeah. So I mean, it's interesting, right? So I think the cost to build, right, is interesting.
mhm,
And something that a lot of people aren't aware of, like just the permitting, right? The cost
yeah.
for the permits, the paperwork, all that stuff. Depending on the
Mhm,
city, I mean, it could be astronomical. Before you even put a shovel in the ground, you could be 100 grand. So,
mhm, mhm.
and these construction companies, these builders, they're just passing that cost to the consumer, right?
Yeah.
So
Yeah.
that's another cost. And then in terms of home affordability, I mean, obviously the wages aren't keeping up exactly. Homes have been going through the roof since COVID, right?
Mhm,
So
mhm,
um, yeah, I mean, I think from 2018 to 2020-ish, right, homes took a jump, and then
dramatically, yeah.
even if you bought uh, when the rates started shooting up from 3 to 6%, home values again jumped up, right?
Mhm.
Because all of a sudden it's more valuable, right? Um, so yeah, homes have definitely gone up. I think to get more affordable, we probably have to look at more creative things like different ways to build, right? I think modular homes have been something that people are looking at. Um, and then 3D printing homes, right? That's kind of crazy. I don't know if you've seen that.
Yeah, with the concrete, yeah,
Yeah,
that's
yeah, yeah,
kind
yeah,
of the new wave.
yeah,
I don't
yeah.
know about that. There's also the ones where they're building with like this Lego system,
Yeah.
um, where it's like created out of what looks like some kind of foam, and they
Okay.
fill the insides with concrete, and then they build around it. And so
Yeah.
it's kind of like they have new concepts, but I
Hmm.
mean, I think the cheapest way to do them and make it nice and big is barnuminium style.
Mm. Interesting.
Or like you said, modular homes, right? Modular homes are probably
Right.
pretty affordable.
Right. Right. Which I don't know. On the mortgage side, those are kind of like not popular, right? Not a lot of lenders do that. Right?
Actually, modular homes are
I mean,
treated like regular stick built. So
really?
yeah, they are. Manufactured homes now
Okay.
are different. Yeah,
Ah,
if you're
okay.
looking at a manufactured home, then they do not treat it like that, and they treat it like a trailer.
So manufactured home is like you said, a temporary home on a not a solid foundation.
So okay, so the difference between modular and
Manufactured.
manufacturer is manufacturer, they built the whole house in a factory,
Yep. Yep.
and they might have it split in half, and then when they'll
Mm-hmm.
bring it out to the land, it's
Yep.
usually on some kind of a trailer. They
Mm-hmm.
have to reattach it together, and if they never take it off the trailer, it's considered a vehicle, not a house.
Yeah.
So you
Yeah.
can't get a mortgage on it, you have to get an auto loan,
Right.
right?
Right. Right.
So
I mean, they have the
but
double wide homes, right? So the double wide is like two trailer homes, and you just kind of
yeah, basically that I mean that's a manufactured home, right? The double wides are manufactured homes.
yeah.
But dude, I've seen super nice
Oh yeah.
manufactured homes.
Yeah.
Now, modular is they build out rooms, right?
Mm-hmm.
And walls that are kind of stuck
Okay.
together. And so
Okay.
then when they get out to the site, the rooms and stuff are already ready. So then they just plug it in and then they
Mm.
build it
They
just
fold
like
it up.
stick built where they bolt it up and then it's considered acceptable.
Mm.
The manufactured home walls are not as thick either, usually not as thick.
Mm.
So basically, if you're in the kitchen and you're singing your song while you're cooking, right? Someone that's in the bathroom could probably hear you. Um, I mean, granted, if the bathroom and all that stuff is closed, you could probably do that too, but you can hear them probably across the hall, right?
Yeah.
In manufactured homes where in these days, like the manufactured homes have gotten so much better. Um, so you may not hear it, but usually, right? That's kind of how you tell the difference is those single wide, double wide, those are manufactured homes. Even some mini homes are considered manufactured homes, right? But when it comes to modular, they're usually built out to be pretty decent sized homes,
Mm.
like 2 stories usually.
Okay. Cool. So, yeah, any closing statements you want to make on this whole, you know, dealing with all these mortgage headlines? What's your advice for people?
Um, that's tough. Um, my thoughts is that instead of waiting for the government, this is just my personal opinion.
Uh-huh.
Instead of waiting for the government to do things for you, you have to figure out a way to make more income, be more valuable in the market so that you can have enough to purchase the type of house that you want. Everybody wants $1 million. Well, back in the days, anyways, like 10 years ago, everybody wanted $1 million home, right? $1 million home nowadays like seems like a typical normal big house, right? But back in those days, they were more mansion style. And
Mhm.
everybody wants a mansion, but not everybody wants to get it, nor does everybody want to go through the process of getting one. I recommend you just go through the process, work hard, and not just work hard, work smart, learn skills, grow. And I think that, you wouldn't worry so much about affordability. Now, if you're an average person, man, it's going to be tough. It's going to be tough. And
Do
I
you
think that
recommend people
home
wait?
prices, what was that?
Do you recommend people wait to buy?
Rather than a 50-year mortgage, yes. Wait until you have enough money to put down, can afford it, have the right job. Don't just rush into look, at the end of the day, right? Everybody wants a nice house, but what does a house do? Right? It's just shelter.
Mhm. Mhm.
That's all it is. It protects you from the outdoors. It keeps you warm, keeps your family warm. Yes, if you own a home, the likelihood of your kids being more successful in life is probably significantly higher, because as long as the household is good, your family structure is good, you have a stable, warm, you have food on the table. The kids can concentrate better on education as well as their careers. But if
Mm,
you don't have that, then it makes it tough, right?
true.
But at the end of the day, it's, it's a place to, yes, it's a place to call home, but
Hmm.
you can call any size home home.
Yeah.
And you can move to anywhere you would like, maybe to a more affordable spot, assuming, your job allows it. These days, I mean, you and I have been getting a little bit more into AI technology for marketing purposes and, building out our business. Hey, you got to jump on that path, right? You got to move with the way that the economy is moving, and our podcast here is about building wealth and exchanging ideas to build wealth. I recommend you start looking into building your wealth rather than worry about how expensive the mortgages are, or hey,
Hmm.
they're doing a 50-year loan, we should do that, right? And I don't know, it's um if you could, if you can't afford it, fine, right? At some point in time, you'll turn a profit. My hopes is, right? My hope for you is that you'll turn a profit.
Yeah.
But I can't recommend it. I just
Yeah. Well,
no.
so here's my take, right? My take is that I think people should do whatever they can to get in a home as fast as possible. If it means getting a 50-year mortgage, go get it, right? Because quite honestly, y- I was talking to this I had a random phone call from a lead today, right? And this buyer lead, and she was an elderly lady. She was like 68, something like that, and she's like, "Hey, I want to buy an investment property, right?" Um, and she's like, I understand at this point in the game that you don't ever truly own anything, right? We
Mhm,
all here, we're all here, but it's just it's a infinite game, right? And meaning that there is no win. When you pay off a house, you're still paying the property tax, right? You're still
mhm,
paying rent to the city, right? And if you don't pay the property tax, they're going to come take your house, right? And so it's never going to be the end. And there's people out there who preach to pay their debt off as soon as possible. Um, but there's never ends to mean, right? It's always continuing, right? There's always the next thing. So um, do what you got to do to get in the game and understand the rules, right? And especially in real estate, one of the nice things that people don't understand is that real estate appreciates in value, right? And it's not like a car. We were talking about a car. Most cars, they depreciate the minute you drive it off the lot, like
mhm.
30%, 50%. You can't go back the next day and sell it to somebody else for the price you bought it for.
No.
You know, not usually. And so with real estate, there really is no rush to pay things off. I don't think so. Like, 50-year mortgage, whatever. I mean, you're not going to live in it forever. Um, Even a 30-year mortgage, right? You're probably living there 5 years on average, or 5 to 8, right? Is the average. Um, and in that time frame, the appreciation is going to be there. You're going to get to accumulate your wealth, right? Through that. Um, and then this funny part, the lady I was talking to, she's like, "Yeah, I don't understand why people like if a house was a lover, they'd be they would be dating that person, that house all day." Like like they take such great care of that house and they go all out and do all that stuff. It's just, for her, she was like, it's a house, right? It's like I do take care of it, but I'm not gonna go overboard, right? I'm not gonna like, you know, make it super nice and everything. Um, and yeah, I don't know. That's just pretty interesting. So that's my take.
Yeah, I mean, look, I bought my house back when they allowed 100% financing. I was like 21 and I picked it up,
Hmm. Hmm.
and it's done phenomenal things for me, right? I've used the
Hmm.
equity to be
Hmm.
able to build my wealth over time, and I think that, if you could do that with a 50-year mortgage, by all means, I
Uh,
just don't like it.
well, I mean, you what you just said though is very interesting, right? And a lot of people,
Mhm,
some people have different feelings about using the equity in the home that they live in that they call home, right? They
mhm,
feel it's risky, right? They're not willing to borrow money, borrow equity from the house that they call home because they don't want to lose it, right? Now
true.
there's other people who are like, that's just my vehicle to get where I want to get, right? Like if
Mhm,
I want to start a business and in my house got equity, I'm using it.
mhm, mhm.
I'm leveraging it, right? So it's very interesting, right? And yeah, I mean, what you just said, you leverage it, but 50 years, if you can make it work for you and somehow it works for you, why not?
Yeah, more
Right?
power to you. Yeah, more power
So
to you.
yeah, I mean that's all I gotta say. Hopefully it makes sense,
Mhm.
not just random rambling. But
Yeah, I'm 100% with you.
all right. So that wraps up the episode for today. So we are going to be taking a little bit of a break for the holidays here until December. So being that it's Thanksgiving this month, you want to share what you're grateful for? Should we share some?
Dude,
You
I'm
go first.
grateful for everything. You know
I-
me, I'm a pastor, dude. I'm grateful for the air that I could breathe, dude.
That's true.
And I had this condition called gout, right?
Really?
And
You get gout?
like, yeah. I have like, well, it only happens like every so often. It doesn't happen very often, but when it
Okay.
does happen,
Okay.
and the doctors tell me it's gout. Um, and when that happens, like, so usually gout happens in either your ankle or your foot,
Your
and when it
joints.
happens, you realize how heavy you are. And so I'm just grateful to be able to walk normal. Like,
Good
um,
point. Good point. As
but
a person who gets gout, I completely agree with you.
I but I mean, to be honest, like, I have so many friends. Like, I went to the gala this weekend, and I was like,
Mhm.
you know, I didn't wanna go. It wasn't something that I had planned for, but I believe in supporting other people, right? And so when they reached out to me, I was like, okay, yeah, sure. I'll definitely support. I'll be there, right? Both financially and physically. And so they're like, okay, great. We'll see you then. And so I showed up and I realized how many friends I have. Like at the gala, there were so many people. They're like, hey, Johnny, hey, Johnny. And I'm like, oh, I didn't realize I had this many friends. Like, and of course I made new friends too. And so it's such a benefit to be able to have friends, especially this year when we had a conference, a Christian conference that we did,
Mhm.
and I called upon my pastor friends, and every single one of them answered. I didn't have to pay them to come. The place that we did it at, they volunteered and allowed us to use their facilities. Dude, we did a conference for under like $3,000. And
Mhm.
like, if you talk to conference
Crazy.
people, they're gonna be like, dude, minimum $100,000 for a
Oh, wow.
conference, minimum.
Yeah.
And I was like, yeah, I did it for three. And so that being said, like, I'm thankful for super thankful for great friends. This year has been a tremendous year. I'm thankful for all of my clients, all the people that supports my business and what I do, all the people that likes and subscribes, right? Please,
We
please
only
like and
have like
subscribe.
we only have like 17 on YouTube, okay?
Hey, we appreciate every single one of you guys.
Yeah, yeah. No, so yeah, for me, I mean, kind of similar. Actually, you know what? The only time I get gout is around Thanksgiving, and that's because I go around and I eat like we have, we're home people, right? We have like
Yeah.
4 Thanksgiving meals to go to, right? So it's kind of crazy. It gets crazy. Like we have too many family, right?
Mhm.
But yeah, I hope I don't get gout this year. That would be great. Um, but actually, I've been fasting a lot, so I've been like
Nice.
eating less, and fasting is pretty cool because it's nobody promotes fasting because there's no money to be made off of fasting, right? There's no special pill.
Right.
There's no special medicine. You just eat
No,
less.
there isn't.
But anyway, yeah, also, super thankful for, you know, um the network, the people, right, that
Mhm.
are in my network, the people that I know. Like you said, sometimes we don't stop to think about the people that we know and are there to support us and help push us along, right? So
Yeah.
yeah, just super grateful for that, and of course family. So yeah, so that's it. If you're watching this, wherever you're watching from, if you want to participate, sure, drop us in the comments what you're thankful for this Thanksgiving. um and we only have 17 subscribers, so we will read every single message.
Absolutely.
So yeah, that's it for us. We'll be off the air again for the next 2 weeks. Hopefully you guys enjoy your Thanksgiving. We're gonna spend our time with our family and recharge after the holidays. We'll see you in December, and we hope to have some more interesting conversations with future guests, more interesting topics. If you guys are interested in hearing a certain thing, please let us know so we can get those guests on here. Anything you want to add?
Yeah, just happy Thanksgiving, and we'll see you next month.
All right, peace.
Later, guys.